Hello, my name is Dominic Maria. I'm an agent with Porcupine Real Estate. We are here today with Liz Going from Prime Lending to talk about another topic in our financing FAQ series. We're continuing to talk about VA loans, and we're going to be asking her about assumable mortgages. So, Liz, we've heard in certain listings, they will list that there is an assumable mortgage as part of a VA loan. What does that mean, and how do they work?
Yeah. So a really neat feature of VA loans is the fact that they're assumable. Basically, what that means is that if you have a really nice 3% interest rate on your current mortgage, somebody else can come in and take over that mortgage and assume that rate. But with a VA loan, there's a couple caveats, right? First of all, an assumable loan doesn't get done by somebody like me. When you assume a VA loan, you don't have a new loan created. You're taking over one that already exists. And for that reason, the person who takes care of handling the assumability and deciding whether or not the applicant qualifies, the assumee qualifies, is the current mortgage servicer. So whoever's name is on the mortgage statement that they receive every single month, that's who they need to contact, and the seller needs to contact them and ask for a copy of their assumability packet. Now, the assumability packet's about this thick, and it's going to take a little bit of time. Assumability is not something that happens like a normal real estate transaction in 20 to 45 days. This is something that could take 60 to 90 days, and in some cases, we've heard up to 6 months. So it can be a lengthy process. The other thing is regarding veterans. With assumability, I always caution my veterans, civilians can assume a VA loan. They absolutely can. But the problem when a civilian or somebody who is dishonorably discharged from the military and doesn't have the VA entitlement and benefit, the problem is that the service member who bought the house, right, the seller, their entitlement with the VA is going to be tied up on that house indefinitely. So basically, they're donating their entitlement to somebody who doesn't have it.
So you couldn't buy a house. You couldn't buy a house that after selling your house.
Yes, you're going to leave some of your entitlement behind on that property, which very well could affect your ability in the future to buy a home with your VA home loan benefit of 0% down.
All right.
So I never advise my veterans to have a civilian do it unless, maybe it's a situation that's like great grandpa wants his, great grandson to assume, his VA loan, that sort of a thing. It's going to stay in the family, and, it's versus, just letting any Joe Schmo come in. Because another thing too, is that if you allow a civilian to assume your VA loan, if the civilian is foreclosed upon, if they don't make the payments, short sale, anything like that, that's actually going to be reflected on the seller's future certificate of eligibility regarding that home loan.
Once that loan is paid off, though, then they get that benefit back.
They would have to apply for a one-time restoration of benefit, and that's going to be really, really hard to get their buyer to report back to them in 30 years or however many years to show that it's paid off.
Right.
So for me, I just advise my veterans, just don't do it. It's your entitlement. You earned it. Don't allow someone else to ruin your future, or, make your future a little bit more difficult, or B, put your future at stake by, maybe not making payments on that loan that they assumed. And, now all of a sudden you've got a foreclosure on your record.
So the process of buying a house or putting in an offer with an assumable mortgage. So if I have a house that's on the market that has an assumable mortgage and I want to put an offer in, do I need to put that in my terms? Like this loan is contingent upon me getting approval for the assumable mortgage?
I would, because they're not going to be getting a new VA loan. A new VA loan is not going to be originated. The company who's currently accepting the payments for that current mortgage, they have to decide that the new person walking in is a satisfactory credit risk for them. So imagine, Dominic, that you loaned me $100,000 because you know me, that, I have good credit, that I have good job, things like that. And then I have some other person come in that says, I'm going to take over the remaining 90,000 that Liz owes you. You're going to say, well, hey, wait a minute. I don't know anything about you. Do you pay your bills on time? Do you have a job even? It's the same thing for a servicer. So every servicer is going to have their own requirements. So I would certainly put that in the offer that, if you're working with a veteran, or in this sort of a situation, my client is a veteran. My veteran, he would like to explore, and make this offer contingent upon being approved for the assumption.
Great. That's, I think, all the questions that I had for the moment. If you have any other questions and people want to reach out to you, where would they get in touch with you?
Yeah, so people can shoot me an email at lizgoing at primelending.com, or they can follow me on any of my socials at lizgoinglo. And veterans, you can grab a copy of my VA home loan guide. It's on my website, www.goingva.com.
Thank you very much. Have a great day, everybody.